Good evening, this is Tommy Lackey, and tonight is February 27th, 2014. I thought we'd do a quick breadth review to kind of see how things were going as we bring February to an end. So let's go ahead and get started and jump right in. Starting as we always do with the new high, new low differential. Today we had 105 new highs, 5 new lows, and that was an expansion from yesterday. And these continue to cluster on the new high side. New lows are almost non-existent at the moment after we saw the spikes in early February. And both price and the new highs continue to grow. The moving averages, both the 10 moving average on the new high, new low differential and the 30 are both now pointing back up as well. So this one looks pretty good. Now we move on over to the advanced decline line here as well, and as we can see, it made new highs, and it actually made new highs earlier before price did. And so it kind of snuck into the new high territory, leading price, which is always a good sign as well for strength in the markets. So our long-term indicators are looking pretty good. Okay, I said the long-term indicators are looking pretty good. Actually, they're looking very good. And we move up here to the McClellan chart, and we see on it we have both the oscillator and the summation index. And the oscillator has been hanging around up here near the highs, as you can see, and kind of clustering up pretty high. As I've said before, when it clusters up there like that, that's a good sign showing strength. And then we see the summation index continues to run higher, and it's getting ready to make new highs going all the way back to last summer. So if it continues to move up from here as we break out to new highs, I would not be doubting this or putting weight against this move too quickly. Now, along with the McClellan oscillator, the other short-term indicator that we use is the breadth thrust indicator. Again, it had a great thrust off the lows in February, and now it's kind of clustering up towards the highs, which shows that the strength is not letting up. Now, don't worry, it's diverging a little bit because, as I've showed before, this one can diverge for quite a while. And even if it does pull back here, I don't really use this for a topping indicator. I like it more for bottoms. So we can keep an eye on it, but it's not something we're going to worry about too much. Next, we move over to our moving average breadth chart, and as we can see on this chart, all three of them are getting back up into a nice high zone. The 20 SMA, percent above the 20 SMA, is now back up to the top line, getting ready to break through. The 200 SMA is also broken back through that top horizontal line, and the 50 is lagging a little bit, but still making progress, so it's not something I'm worried tremendously about here. That's the nature of moving averages, but all three of these are strong. And again, I want you to look back and realize how solid that signal was off of the end of January, beginning February lows. And if you remember, that signal came just a couple of days after this 90% down day we had in the markets, when everybody was starting to talk about things really getting bad after just maybe a couple of day bounce. Well, as we see, that couple of day bounce materialized into a lot more, and you can notice as well on top we haven't had any 80 or 90% up or down days since then, showing we've just been kind of grinding higher as money moves back into this market. That's something we had discussed in the SIN report, Strength in Numbers report, that I put out every week, which is where most of this breadth work ends up. And basically we talked about that money managers and RIAs were going to be putting money in the first chance they got here in the new year, and it looks like that chance was the beginning of February, and they haven't stopped since. Alright, so there you have it, a quick macro breadth review of the universe that I use of only stocks, no ETFs, no other interest sensitive type stuff. And it goes in the Strength in Numbers report, which I put out every weekend. If you're not on the list and would like to get a copy at this point, please email me at gtlackey@gmail.com, and I'll be happy to put you on the list. And also, please add your StockTwits Twitter handle, just so I can know who it is that's reading and who it is that I'm working with. So I hope this helps. Looks to me like things are strong right now, doing well as we move into new highs, and certainly we can pull back and this can change at any time. But for now, like I've said all year, the breadth continues to lead us and be pretty solid across the board. All right, have a great evening, and we'll look forward to trading with you tomorrow. Bye-bye.